Today, as Emily noted, we're going to be talking about the Employee Retention Credit for 2020 specifically. So this is everything related to last year. If you joined our webinar yesterday, we covered how the credit changed for 2021. Today, we're going to look back and talk about what you needed to do to qualify for the credit last year, and how you can still go about claiming the credit if you are just realizing that you do qualify, or if you're in the process of doing some analysis to determine what that credit amount is. So with that, just a reminder, the American Rescue Plan Act of 2021 was signed into law back on March 11th. It was a $1.9 trillion stimulus package. It did impact ERC. I'm going to refer to the Employee Retention Credit as ERC throughout this presentation. So it did extend ERC through December 31st of this year. Again, in this webinar, we're going to be talking about the credit as it applies to last year, but just wanted to make sure that everybody knows that the credit has been extended through the end of this year. The American Rescue Plan Act also expanded eligibility, so it made more organizations eligible to receive the credit. It clarified some exclusions when applying for other credits and or stimulus money. We will talk a little bit about how, actually we'll talk in depth about how ERC and PPP work together. And the American Rescue Plan Act of 2021 also added a 5-year statute of limitations for the IRS to be able to come back and ask questions and potentially audit your claiming of the credit. That wasn't there before, so I wanted to make sure that everybody understands that that statute of limitations is new as of the American Rescue Plan Act. So 5 years, essentially from the time that you file. So if you are claiming the credit for 2020, and you're filing a Form 941X, which we'll talk about, there is a 5-year statute of limitations for the IRS to come back and ask questions about that and potentially audit that filing. So just make sure you're keeping that in mind when you're thinking about whether or not you're eligible and what the requirements are. So let's talk a little bit about the Employee Retention Credit for 2020. Again, if you joined us yesterday for the credit as it relates to 2021, you'll notice that there are quite a few differences. So in 2020, the credit was still a credit against the employer's share of Social Security tax. However, it was only equal to 50% of qualified wages paid to employees between March 13th of 2020 and December 31st of 2020. So again, it is really important to separate the Employee Retention Credit of 2020 and 2021. That's why we wanted to make sure that we had a different presentation for each year, because the eligibility, some of the definitions, and the credit itself is different in each year, and there are important differences to be aware of. So for 2020, the qualified wages are capped at $10,000 per employee per year. So that's the whole year. There isn't a quarterly cap. The qualified wages are capped at a total of $10,000 per employee for the entire year. Again, that's that March 13th through December 31st period. You cannot claim this credit on wages paid prior to March 13th. March 13th is kind of the drop date, we'll say, for kind of when everything went into COVID lockdown, things were starting to be shut down. So March 13th is that defining date for when you can begin claiming the credit. The maximum credit per employee is $5,000 per year. So again, that's that 50% of qualified wages capped at $10,000 per employee per year equates to a maximum credit of $5,000 per employee per year. Eligible costs, so to get to that $10,000 cap, can also include employer paid group health insurance costs. At this point in time, and in going back and reading the information, it does look like it is specific to group health plans. So it doesn't include long-term or short-term disability. It doesn't include life insurance. We're talking about paid group health insurance costs, so employer paid group health insurance costs. So if you're struggling to hit that $10,000 cap just on wages alone, you can also include employer paid group health insurance costs for those eligible employees. Since we are talking about the credit for 2020, the only way at this point to apply for the credit is to file a Form 941X, which is the Adjusted Employer's Quarterly Federal Tax Return. If you file a Form 944, which is an annual return, there is also a 944X, I believe that's an adjusted return. I'm going to be referencing the quarterly Form 941 as that is the payroll tax form that most organizations are going to be filing. But just be aware that if you do file a different payroll federal tax return, there are amendments and adjustments to those returns as well that you can file. And a reminder that you can claim the credit even if you received a PPP loan. So that change came from the Consolidated Appropriations Act, the Economic Aid Act signed on December 27th of last year. Originally, the Employee Retention Credit and PPP loans were mutually exclusive. You could not take one if you claimed the other. You couldn't claim one if you took the other. So the Economic Aid Act from December 27th changed that. That's kind of why we're revisiting this. For a lot of organizations, they had received a PPP loan in 2020 and automatically didn't believe they were eligible for the employee retention credit, which at first they weren't. And so the economic aid changed that. And we're going to talk through some of the some examples about how to manage if you've already applied for PPP loan forgiveness. The important note is that you cannot use the same wages to apply for PPP loan forgiveness and the credit. Essentially, double dipping has been kind of our key phrase. There's no double dipping allowed, so you have to be very careful when you're analyzing the wages that you're using to claim the credit for 2020. Same goes for 2021. So are you eligible for the credit in 2020? Similar to 2021, there are two ways to qualify. However, again, just note that there are differences in the qualification requirements from 2020 versus 2021. So the first way that you might qualify is if your business operations were fully or partially suspended due to a government mandated order related to COVID. This is the same one of the same qualifications for 2021. The qualified wages would begin when the government order is put in place. As a reminder, that date cannot be earlier than March 13th. So March 13th is that start date for potentially being eligible for this credit of 2020. And then the qualified wages would end when the government order is lifted. So if you are in a state or a county or a city where, for example, restaurants were forced to be shut down from March 13th to June 20th, that period of time would make you eligible for the employee retention credit under this first way to qualify. The second way to qualify is our favorite gross receipts decline test. If you've been attending our webinars, I feel like we've talked about declining gross receipts enough to make anybody maybe hate us at this point. But unfortunately, it's just one of those tests that's going to be applicable across all of these different lending programs and credits. So for 2020, to be eligible for the credit, you actually had to show a 50% decline in gross receipts in any calendar quarter in 2020 compared to that same calendar quarter in 2019. So just a reminder, this is different than the qualifications for 2021. I'm gonna just kind of continue to repeat that because I just want to make sure that everybody is clear that everything we're talking about today is specific to the credit in 2020. So that's applying for the credit on wages anytime between March 13th and December 31st of last year. So if you meet the gross, let's say your business operations were not fully or partially suspended, but you do meet the gross receipts test. So again, you're comparing the calendar quarter in 2020 compared to that same calendar quarter in 2019. If you meet that test, the qualified wages begin on the first day of the first quarter that you become eligible. I've put this note except for quarter one of 2020. Again, that's because the qualifying wages can start on March 13th. So that's most of the way through first quarter. And then the qualified wages end on the last day of the calendar quarter for which gross receipts are greater than 80% of the gross receipts compared to the same calendar quarter in 2019. So that's kind of a mouthful of words. Essentially, what it's saying is that, let's say you qualify in the second quarter of 2020. You had gross receipts of were less than 50% of the same calendar quarter compared to 2019. You're eligible for all of quarter two, and you are automatically eligible for all of quarter three. In quarter three, your gross receipts continued to be less than 50% of your gross receipts in quarter three of 2019. You would continue to be eligible through quarter three. And let's say in quarter four, business went back up, and maybe now you have more gross receipts in quarter four of 2020 than you did in 2019. You are actually still eligible in quarter four because that's the quarter that you exceeded 80%, greater than 80% of the gross receipts compared to quarter 19. So again, you can be eligible for multiple quarters. Once you qualify in 2020, you are automatically going to be qualified for that quarter and the following quarter, but you'll need to do the test in each quarter to determine what your decline in gross receipts was. So another difference that I wanted to make sure we highlighted was what a large employer versus a small employer means. Being a large employer versus a small employer will actually change how you are eligible for this credit. So a large employer for 2020 is an employer that averaged more than 100 full-time employees in 2019. For 2021, that number was increased to 500, but for 2020, it remains 100 full-time employees. Full-time employees for the employee retention credit means an employee who worked an average of at least 30 hours per week or 130 hours per month. So just note that that's different. That's a different definition of a full-time employee for PPP. It may be different for some of the other loans or advances or credits that you're applying for, but you always want to point to whatever the exact definition for the credit or funding that you're applying for. So full-time employees for the employee retention credit is at least 30 hours per week or more. So for those large employers that averaged more than 100 full-time employees in 2019, qualified wages are those paid to employees that were not providing services because operations were fully or partially suspended or due to meeting the gross receipts decline test. So what that means is that you were essentially paying employees not to work. Not that you were paying them not to work, you were paying them and didn't have any work for them to do. So maybe they weren't coming into the office. If you were a restaurant, you were paying them even though your restaurant was closed. That is the only way that a large employer will qualify for this credit in 2020. On the other side, being a small employer means that you average fewer than 100 full-time employees in 2019. And if you fall into the small employer category, qualified wages are wages paid to all employees if you meet either of the qualifying tests. So that means maybe you were partially open for business. Again, I'm going to use a restaurant example. Maybe you were at 25% capacity. You started doing carry-out service. So you had some employees that had come back that you were paying. Some, maybe you didn't have enough work to fill all of the employees. So you were paying some to come in and work and some to not come in and work. All of those wages qualify if you fall into that small employer bucket. I did put a note here that aggregation rules do apply. What that means is if you're the owner of multiple businesses, there's common ownership. If you have similar management, aggregation rules mean that you have to take into account all of those businesses that have common ownership, common management, and you have to look at the employer counts based on that aggregate total. So you aren't able to look at each of your businesses separately. You have to aggregate the total, even if they are different types of businesses. If there's common ownership, you will need to look at the total number of employees in the aggregate. So our owners' wages. eligible for the employee retention credit. This is a question that came up yesterday, and I unfortunately didn't have a slide, so I wanted to make sure that we addressed this. So for the employee retention credit, this applies to 2020 and 2021. Owners with greater than 50% ownership in a corporation may not claim the credit against their own wages. And in this instance, what are called attribution rules apply. And what that means is a related party to any of those more than 50% owners also may not claim ERC against their wages. An example would be a woman is a 75% owner of a business, and her husband and her son also work at the business. Her wages will not be able to claim, you won't be able to claim ERC against her wages. In addition, you won't be able to claim the credit against her husband or her son's wages because they are related parties to a more than 50% owner. So that's important to note as well. If we have any cooperatives on the call, I know this has been a big question, so hopefully this eases some of the worry about whether or not owner employees will be able to take this credit. It is more than 50% ownership must occur. So how do you claim the credit? Obviously 2020 is done, and you should have at this point filed all of your timely Form 941s. Form 941s are due on the last day of the month following the end of the quarter. So they're due April 30th, July 31st, October 31st, and January 31st. So you should have at this point, whether it's your outsourced payroll provider or if you do payroll in-house, all of your 2020 Form 941s should be filed. So to claim this credit now, you will need to file a Form 941X, and you will need to file a 941X for each quarter in which you determine you can claim the credit in 2020. So what I've done on the next few slides here is I've just pasted a few screenshots of the form itself, just to give people familiarity who maybe aren't as comfortable filing the 941X, aren't sure what it is. I wanted to just have an example of what it looks like and some of the boxes that you'll need to be looking at. The Form 941X, similar to the Form 941, was updated to include lines for FFCRA credits and the employee retention credit. So if you filed a Form 941X in the past, it's going to look a little bit different. Another item I just want to mention is that if you haven't already been in communication, if you have an outsourced payroll provider, you'll want to be in touch with them to see if they can assist you in filing this form. Ideally, your payroll provider would assist you. The likelihood is that either you, or if you work with an accountant, if you work with us here at Wagner CPAs, we can help you with the analysis of determining what wages are eligible for the credit. But you'll need that information if your payroll provider is able to file the Form 941X for you, so that you have the appropriate information to give them before they file this return. Just a side note as well, we are working on a process to help clients if you are having difficulty reaching out to your payroll provider, or if they are not able to file the form for you, or you're not comfortable filing it yourself. We are working on a process to assist our clients so that you can be getting this credit, claiming the credit, and getting the forms filled out correctly. So this is kind of what the top of the first page looks like. You're going to be putting in your organization's information, excuse me, and entering in the quarter that you're going to be filing for. You also need to enter the date that you discovered the errors. We're going to call them errors. That's what they call them on the form. But essentially, you're going to put in the date that you discovered you were eligible for the credit. Ideally, this is going to be around the same time that you actually file the return. The rest of page 1 is filled with different certifications. Page 2 includes a number of boxes that you'll need to be looking at. If there was a non-refundable portion of the credit, you'll need to adjust for that. And if you are filing an amended return for quarter 2, line 24 is specific to quarter 2 filing. If you deferred the an amount of Social Security tax on your quarter 2 return. excuse me, tickle in my throat. Page 3 includes information related to the refundable portion of the employee retention credit. And page 3 towards the bottom then also includes a number of other lines that are attributable to the employee retention credit, qualified health plan expenses. What is likely going to happen if you didn't file for this credit on those original returns, that first column is what you're going to put as the correct filed number, and then the second column is how you originally filed. So for many of these, that second column is going to be 0 because you didn't file for the credit. You're filing for it now. So that's essentially what the 941X does. You basically fill out in the first column how you intended to file. The second column is how you originally filed, and then the third column is going to show the difference, and you'll do calculations off of that third column. Then on the fourth page, you do have to give a detailed explanation of how you determined your corrections. So again, if you have a payroll provider and they can help you with the 941X, they can also help create a detailed explanation for you. Or if you have your accountant or Wagner CPA's help, we can also help you with that process. But the 941X will be the only way that you can file for this credit in 2020 at this point. So how do you prepare? First, you need to determine if you meet one of the 2 qualifying tests for 2020. So that's either that partial or full government mandated shutdown, or that 50% decline in gross receipts from 2020 compared to that same quarter in 2019. Next, you're going to want to determine which wages can be used for the credit. As I noted before, wages used for PPP loan received in 2020 are not eligible. Wages paid under FFCRA are not eligible, and wages used to obtain a number of other credits are also not eligible. Once you have that information, you're going to file a Form 941X for each quarter in which your organization had qualified wages. So the screenshots of that form that I just showed, you're going to need to file that form for each quarter that you determine you had qualified wages. Excuse me, I'm sorry. So what if you filed for PPP forgiveness already? I promised I would go through some examples because this is kind of the category that a lot of our clients, a lot of attendees of our webinars are falling into. So these examples are based on you have filed, you've used your PPP loan for 2020, you applied for forgiveness, let's say last year, and you've received forgiveness. So that in this first example, you listed only wage costs, and that's all you use to apply for forgiveness. The amount of the wage costs are equal to the forgiven that are equal to the forgiven PPP loan are not eligible for the employee retention credit. So in this example, the borrower received a PPP loan of $100,000 back in April of last year. The borrower was also eligible for the employee retention credit for all of 2020. So again, that's March 13th through December 31st of 2020. They applied for and received full PPP forgiveness back in October of last year. And on that loan forgiveness application, they reported $100,000 of payroll costs, all attributable to wages. So that $100,000 of wages that was reported on the loan forgiveness application cannot be used to claim the employee retention credit. Essentially, that $100,000 is out of contention for claiming the credit. So what if if payroll costs reported on the loan forgiveness application were in excess of the total loan amount, and also you had some eligible non-wage payroll costs, so things like group health, group life, disability, retirement, employer paid retirement, and state and local unemployment taxes. So in the same scenario, in this scenario, the PPP loan was still $100,000 received in April. Borrower was eligible for the employer retention credit for all of 2020 again. They applied for and received forgiveness in October, but on that application, they reported $200,000 of payroll costs on the loan forgiveness application, which also included the employer's share of retirement contributions and state and local unemployment tax. So both retirement contributions and state and local unemployment tax are eligible uses of funds for PPP, but are not eligible costs under ERC. So in this example, the borrower may claim the credit on $100,000 of the reported payroll costs. That's because their PPP loan was only $100,000, even though they reported $200,000 on their application. That extra above and beyond $100,000 that they reported is eligible for the credit if they were eligible for the credit for the entire year or in the period that their covered period covered for PPP. In the last example, I've got a few more pieces here. So if payroll costs reported on the loan forgiveness application were again in excess of the total loan amount and included eligible non-wage payroll costs, so employer's share of retirement, state and local tax. In addition, eligible non-payroll costs were also reported on the loan forgiveness application. So those are things like rent, mortgage interest, utilities, PPE costs, covered operating expenditures. So same scenario, again, PPP loan is $100,000. They were eligible for the credit for the full year, March 13th through December 31st. They reported $200,000 of payroll costs. Again, that included not just wages, but also retirement contributions and state and local unemployment tax. And they also reported $50,000 of eligible non-payroll costs. So essentially they have a PPP loan of $100,000 and they have $250,000 of reported eligible costs on their loan forgiveness application. If this is similar to your situation, in this instance, you can play with these numbers a little bit because essentially you need to have at least 60% of the PPP loan going used on eligible payroll costs. The other 40% can be used to cover those eligible non-payroll costs. So in this example, the borrower needed to use at least $60,000 of that $100,000 PPP loan on eligible payroll costs and $40,000 on eligible non-payroll costs. Since they reported more than both of those amounts for payroll and non-payroll costs, they can use the over-reported payroll amount of $140,000 to claim the employee retention credit. I would highly recommend when we post these to go back and read through these examples. I know I just went through them pretty quickly. We're doing short series this week, but I wanted to make sure because I know that this is a situation that many clients, many organizations may be in right now. And so I wanted to make sure that we went through that. So with that, we've got a few links and I know we've got some time for questions right now. We're right at 10:30. Melody.
First question on your last examples, what if it's only other expenses? So retirement, health, so forth, all the wages have been used up. Is that still okay?
That is still okay, yep, because eligible payroll costs are defined for PPP as gross salary and wages, the employer share of health, vision, dental, life, short-term, long-term disability, the employer's share of retirement contributions, and those state and local unemployment tax. There isn't any percentage of that that has to be specific to the wage costs. So if in this example, the $60,000 is all retirement contributions, health insurance, state and local unemployment tax, that's okay.
And if I haven't filed for forgiveness yet, I have many more options and ability to allocate as it makes the most sense, correct?
Correct, yes. So if you have not submitted your PPP loan forgiveness application yet for 2020, you absolutely have a lot more opportunities to do some additional analysis. One other item I just want to note, it is important that if you are in this situation, maybe you didn't realize that you could do a little bit of, I hate to say playing with the numbers as an accountant, we don't ever want you to play with the numbers, but maximizing the benefit from these programs. If you have submitted your PPP forgiveness application to the bank and the bank is still processing it, you do have the potential to request the application be pulled back from the bank. If you are in this situation where you think you may be eligible for a certain period of time that your PPP loan also covered. The issue will arise if your loan forgiveness application has been submitted to the SBA. Once it's submitted to the SBA, there is no getting it back. It's done. You can't amend your PPP loan forgiveness application once it's been submitted to the SBA. You're out of luck, and you kind of have to go back to these examples to see what you can and can't do. If you reach out to your bank, again, this is if they allow you to pull the loan forgiveness application back. If it's already kind of through whatever their process is, they may not allow you to. But I have seen a number of cases where bankers are accepting you to pull that back. So again, if you fall into this situation, just make sure that you're in touch with your banker, find out where the loan application or the loan forgiveness application is in the process. And if you can, pull that loan forgiveness application back. This way you can do some additional analysis to make sure you're maximizing the benefit, because these are huge credits. Even though the credit for 2020 is far less than it is for 2021, it still has the potential to be a massive credit for your organization. And if you continue to struggle, if you have been struggling, if you struggled in 2020, these credits can really do an amazing amount for your organization.
Can you
one thing I just want to mention, sorry, Melody.
No.
I realized in talking about the 941X, I didn't also mention how you would receive the credit. So when you're applying for the credit on the Form 941X, essentially what you're doing is you are applying for a refund of the credit. Since you won't have the ability to apply it towards future payments, you would be essentially requesting a refund. Now, I will tell you that the Form 941X is a paper return. What that means is you cannot electronically file it anywhere. It has to be signed and mailed to the IRS. What that also means is that it will take much longer for the IRS to process. That's why if you attended yesterday, I made sure to stress the importance of filing for the 2021 credit timely with your Form 941, many of which can be filed electronically. This cannot be filed electronically. It must be filed via paper. And if you are filing for multiple quarters, please, please, please make sure to put each 941X in a separate envelope and mail it to the IRS. Do not put all 4 of them in one envelope and mail it. The IRS will likely only look at the one that's on the top and ignore the rest of them. So you want to make sure if you're filing an amended 941X for all 4 quarters, you're going to want 4 envelopes. And put 1 in each envelope and send them off to the IRS. But know that it is likely, honestly, I would estimate you're looking at about maybe 6 to 10 months before you might actually see that refund. But know that it is coming, and they can be pretty big dollars.
Can you explain, because you did such a great job of it yesterday, about the extension deadline for 941s and how that applies to this situation?
So the deadline for when you can file a Form 941X?
File the amended, yep.
Absolutely. So there really isn't much in the way of a deadline for filing the Form 941X. However, as I noted on, and I'll go back to this, the first page of the form, you'll see down here where it says, enter the date you discovered the errors. Essentially, you should be filing the Form 941X at the time that you determine that you're eligible to file the Form 941X. So I would recommend doing this really as soon as possible. It's, again, you're going to have to deal with the processing time regarding the IRS. You're going to have to mail it in. They have to open it. They have to process it. And then you're going to have to wait to get a check in the mail. But ultimately, the 941X doesn't really have a deadline to file. You just want to make sure that you do it as close to the date that you determine that you need to file the 941X. Just as an example, and some of the things I've done with Wagner CPAs over the years, I have filed Form 941Xs that were 2 or 3 years past when we filed the original Form 941. And they were processed by the IRS because that was the date that we discovered the errors. So there really isn't a true deadline to filing. Ultimately, you just want to try to file as soon as you determine that you need to file.
Awesome. There is someone in our Q&A that has over 100 employees eligible for the credit in a quarter. Is there a cap on the total that can be claimed?
So if they have more than 100 employees, they fall into that large employer bucket. And so they are limited on what wages they can qualify for. So we'll go back to the large employer versus small employer. So they're going to fall on the left side of the screen. So qualified wages will only be those paid to employees that were not providing services because your operations were fully or partially suspended, or due to meeting the gross receipts decline test. So it's still that $10,000 per year per employee, 50% of those qualified wages, so a max credit of $5,000 per year. But if you are a large employer, that means that your qualified wages are not all wages paid to employees. It's only wages that were paid to employees that were not providing services.
Those are the questions that we have at the moment. So thank you so much for sharing your knowledge and continuing to keep us informed.
Absolutely. All right. Emily, I think maybe we'll throw it back to you to wrap things up today.
That sounds great. Thank you everybody so much for joining us. Just a reminder, we have another webinar tomorrow for our series and 3 more coming up next week. So please just keep an eye out for emails from us to sign up for those. We just want to get all this information out there. If you do have any other questions that weren't answered today, please throw them in the Q&A at the bottom of the screen, and our presenters will follow up with you via email. Other than that, just keep an eye out for a follow-up email from today's webinar that will have the recording from today, so you can go back and reference all the great things that we talked about. But Melanie and Kate, thank you so much for your expertise, and we will see you tomorrow morning at 10. Thanks.
Thank you.
Emily. Bye.
Bye.